Good afternoon and welcome to the Market Closing, our brand new collab show between Business Today and India Today Television. I'm Sakshi Batra. This is 3 p.m. show where we get you all the market closing action. First up, let's take a look at what's hot in the corporate and the financial world. Mother of all deals sealed as India and the EU sign a landmark free trade pact. The agreement, covering nearly 25% of global GDP, creates a 2 billion strong market and is set to boost Indian sectors like textiles, gems and jewellery. Amid global tariff chaos, markets trade cautiously in a range-bound trading session. Sensex is flat near 81,500. The Nifty is hovering around 25,100. Metal stocks are outperforming while autos and consumer durable stocks remain under pressure. Gold and silver futures hit fresh all-time high levels on the MCX on safe haven demand. Prices spurred by US President Donald Trump's new tariff threats against multiple countries. Trump has said on Saturday that he would impose additional tariffs on Canada and South Korea. Stalemate over Ukraine peace talks in Abu Dhabi also leads to higher precious metal prices. Adani Group takes a big leap in aviation and Adani Defence partners Brazil's Embraer to assemble commercial aircraft in India. The pact aims to build a regional aircraft manufacturing hub, boost Make in India. Just days ahead of Budget 2026, former RBI Governor D Subbarao, in a newspaper letter to the Finance Minister, flags policy fatigue, warns frequent tax changes are hurting investor confidence and calls for simpler taxes and a clear Viksit Bharat roadmap. After 20 years of starting and stops, we've seen India and the European Union have finally inked a free trade deal. In what is being seen as a clear rebuff to US President Donald Trump, several deals were signed between India and the 27-nation bloc this afternoon at the Hyderabad House in Delhi. The big one, a free trade deal between the two nations, throws open the Indian market like never before to the European Union. However, India has definitely kept a large part of the politically sensitive agriculture as well as dairy sectors out of the deal's purview, with products such as rice, sugar, beef and chicken excluded from liberalization.
यूरोपियन यूनियन के 27 देशों के साथ भारत ये FTA कर रहा है। यह एक ऐतिहासिक समझौता हमारे किसानों, हमारे छोटे उद्योगों, इसके यूरोपियन मार्केट तक पहुंच आसान बनाएगा, मैन्युफैक्चरिंग में नए अवसर पैदा करेगा और हमारे सर्विसेज सेक्टर के बीच सहयोग को और प्रबल करेगा। इतना ही नहीं, यह FTA भारत और यूरोपियन यूनियन के बीच इन्वेस्टमेंट को बूस्ट करेगा, नई इनोवेशन पार्टनरशिप बनाएगा और वैश्विक स्तर पर सप्लाई चेन को मजबूत करेगा। यानी यह सिर्फ ट्रेड एग्रीमेंट नहीं है, यह साझा समृद्धि का नया ब्लूप्रिंट है। फ्रेंड्स, इस महत्वाकांक्षी FTA
Prime Minister Modi, dear friend, 1 year ago, the full College of Commissioners came to India. You mentioned it. And this is also a very special memory for me. It showed the seriousness of our intent and the strength of our commitment. Today, we reap the fruits of that commitment with our historic summit. And let me start with trade. Prime Minister, distinguished friend, we did it. We delivered the mother of all deals. We are creating a market of 2 billion people. And this is the tale of two giants, the world's second and fourth largest economies, two giants who choose partnership in a true win-win fashion. a strong message that cooperation is the best answer to global challenges. This trade will integrate further our supply chain and strengthen our joint manufacturing power. It will cut up to 4 billion euros in annual tariffs for exporters of all sizes. And it will create good jobs for millions of workers here in India and in Europe. At the same time, this agreement will build on the natural complementarity of our economies. It brings together Indian skills, services, and scale with Europe's technology, capital, and innovation. It will create levels of growth that neither side can achieve alone. And by combining these strengths, we reduce strategic dependencies at a time when trade is increasingly weaponized. We will discuss this and more at our first EU-India Business Forum later today.
Viewers, so it's been called as the mother of all deals as India and the EU have signed this FTA. Let me go across to my colleague Chetan Bhutani to get more details on the same. A historic moment definitely for India and the EU as both the representatives have marked it a win-win deal for both the nations. Chetan, which are the top sectors that you think are likely to benefit the most out of this deal?
Well, 3 to 4 key sectors that are being highly watched out for. First, of course, is the automobile sector. But yes, we'll have to wait and watch as to when the duties come into effect. But the bigger areas, what I feel, Sakshi, is the fact that manufacturing, food and drinks, services, and small businesses take a very big chunk of all of the trade deals put together. Because when you see the manufacturing sector, the duty has been removed on most industrial goods that account for machinery, electronics, chemicals, plastic, iron, steel, pharmaceutical and medical equipment. So clearly, in times to come, we would be expecting cheaper medical treatment in India, surgical devices, medical devices also being hit in India from the UK. That would actually account for a bigger competition in the domestic market. Secondly, Sakshi, we would expect the food and drinks market. The European market would have easy access to India when it comes to wine, spirits, beer, olive oil, fruit juices, biscuit, pasta, pet food, chocolates, and select fruit and meats. But of course, out of the ambit is rice, sugar, and beef because it's a sensitive topic for the European Union. On the services front, we get two major upgrades. We get banking and finance, shipping and maritime. This which allows European banks and European shipping companies to literally come to India, open its base and services, and start operating out of the Indian market, which would clearly create a whole lot of new phenomena for the economy as well. Because if you see European banks coming to India would definitely be a big deal, considering the government wants bigger competition and a larger competition when it comes to the public sector banks. Lastly, Sakshi, the maritime services. If we see European shipbuilding services, European ships docking in India for their services, expanding the demand, they would definitely be a good boost for the India shipping space and create a whole lot of demand and, of course, circular shipping economy in the times to come. So yes, these 3 to 4 sectors form a key chunk of the deal. Lastly, I would also take away the merchant and the leather textile, because the government, both the sides have in fact reduced the duty from 17% to 0%, and essentially bigger access for the European market to come to India, and of course the exporters would also be allowed to have a bigger chunk of their market as well.
Fantastic, Chetan. Thanks a lot for giving us all of those details. So a large part of sectors in India, domestic industries stand to benefit with this deal now getting signed. Of course, this benefit will take some time to really kickstart on ground as well. But let's also see there's some good news when it comes to Indian students and workers as well. As part of the India-EU agreements, Indian students, workers and even professionals are set to get greater access to European countries. Under the new mobility framework, the EU has committed to uncapped mobility for Indian students, allowing them to travel, to study and to work in Europe as well. This agreement definitely allows for commerce, investment, services and movement of skilled talent across borders. All right, and we will also be looking at a lot of stocks that are actually already reacting to this positive move there. Look at a lot of textile related stocks that are on the move. Look at Gokul Das Exports, Indocount Industries, KPR Mills. All of these stocks are pulling up in trade at this point in time. Look at some of the other sectors and stocks that are also passing. Metals, we already pointed out, it's among the top movers today. Even, of course, the banks and IT sectors are doing well. But it's the large part of the Nifty 500 movers that are reacting positively to all these announcements there. Apex Frozen Foods, these are all the frozen foods department that is likely to see export getting a bigger chunk from the EU, now benefiting the stocks like these, about 11% higher in trade. Let's also look at names like even Kitex Garments, that's up by 8 to 9% odd. We are also looking at names like, Imami Paper Mills. Look at even other industries and stocks like Indocount Industries, Gokul Das Exports. These are all the stocks from the textile space, even gems and jewelry. Pull up some of those stocks there, and you will be able to see how some of those stocks are reacting positively as well. Let me actually go across to our guest now. Sharmila Joshi, market expert, is joining in to share with us her view on this big bang deal getting signed. Sharmila, warm welcome. Good afternoon to you. How are you looking at this India-EU FTA finally, getting to see the light of the day? These were the talks that kick-started almost 2 decades ago. They were stalled for 10 years, kick-started again the conversation in 2022. And finally, both the representatives of the countries are marking this as the mother of all deals, a win-win deal across the board. How are you looking at it from the perspective of a market viewer and participant?
So it's a twofold view. One is, of course, I think relief because we've been waiting for India-US deal to happen. And we've not really, you keep going back and forth on that, and we've not really seen people sign the dotted line. Now we have not a deal with the US, not a trade deal with the US, but with another very significant player, which, as you said, was in the works for a very long time. So I think it's heartening on that front that the market has something to really cheer, because otherwise we've seen the way market's been ever since the start of the year. So we've been in this space where you're waiting for things to happen, but things are not really falling into place, and that despondency was beginning to show. So from that perspective, I think market is definitely cheering that you have finally sort of a tangible deal in place. And secondly, I think the deal itself, because as we were discussing, the EU is a big region in terms of business. And the possibilities that open up, therefore, for you are going to be good. Now, I think the finer details will be worked out over a period of time. But yes, I think it's a very sizable deal in that sense, because you do see a significant percentage of exports to the European Union as a whole. And therefore, a deal that has been in the pipeline for so long to finally sort of take shape is very heartening in itself.
Yeah. Sharmila, I think the big question that would be on everybody's mind is that this positive comes in on the backdrop of a lot of trade, tariff-related uncertainties that we've been seeing over the last 1 year. Largely, the talks have been around how India and US have still not been able to ink a deal for themselves. Do you think this 50% tariff impact that we've been facing for a lot of domestic industries, including textiles, gems and jewelry, will some of the impact get offset because of the signing of the India-EU FTA there, and EU now emerging as one of the even bigger players that it was earlier when it comes to Indian exports? How would you look at it?
There are, if you've been watching, and I'm sure everybody has been, what has been happening in Davos, I think, there was one clear sentiment that came from the European leaders there, that there was somehow a sense that there was a very stringent, in fact, speech where they said that it's all about policy and not enough about action. So I think they are sort of getting back into a game where, they don't want to be only about regulation and policy, but really sort of move forward and open doors for trade. And secondly, I think that if you lose on the one hand, you're gaining on the other. And this seems to be a sort of a strategy the world over. Maybe coming days we'll see us strengthening ties with other bigger players like China or some other nations. because ultimately you can only wait for something to happen for an X amount of time. And while it was very optimistic to think that anything could fructify in 90 days, now a significant amount of time has gone by. So if we still don't get a conclusive deal in place, I'm sure all countries, not just India, would be exploring very actively other countries where they can establish trade relations with. And definitely, I think we've taken a very big step forward uh, getting this deal off with the European Union.
Yeah. If I have to ask you, Sharmila, to pen down for us, what are the opportunities as a market investor that you will be scouting on the back of India EU FTA over the next, say, 6 months, 1 year, or even beyond that? Because this deal to finally take effect will also take almost a year's time, because it will now go back to all those 27 nation blocs of EU, and finally all those details will have to be signed one by all those nations. It will take some time. It's not that today this deal has been signed and tomorrow it will get implemented. It will take time. So as a market investor, how would you be looking at playing, say, the textiles, gems and jewelry, electronics, petroleum products, a lot of these sectors and even beyond?
I think petroleum products is the big sort of chunk there, as well as I think IT services. So I think these would be the two clear sectors where the attention focus will first be, and then of course I think gems and jewelry, because that also I think is a significant partner where the European countries are concerned. But as I said, the sort of the real drill down will sort of happen over the next year, where we'll see where the actual benefits are, and as people study it and pass it and get other deals in place, etc. But that said, I think at the moment we are just sort of enjoying it as a sort of a sentiment win, because we've been, sort of uh, in this period where we've been trying to sign off on, so many things happening simultaneously. US going back and forth, all being in intense conversation with the European leaders. So when something like this finally sort of solidifies, I think there is a sense of sort of a sentimental win, and which is what we are enjoying now. Otherwise, it will be all the sort of export-facing sectors, whether it is oil, the petroleum products, whether it's IT services, whether it's pharma, gems and stones, definitely textiles. But I think, as I said, the big ones to focus on will be the petroleum piece and the IT services.
Fair point. One of the other big takeaways, viewers, from the EU-India FTA is also the big fall in prices of luxury cars that could come in. And the deal definitely involves slashing import duty on European-made cars to eventually just 10% from the current high of 110%. However, this is also subject to a cap of about 250,000 cars a year. At present, India levies about 70% import duty on cars priced below $40,000 and 110% on cars priced above this level. This could translate into a massive cut in prices for top-of-the-line cars from manufacturers like Mercedes, BMW, Audi, Volkswagen, and even brands like Land Rover, models which are manufactured in EU countries. And interestingly, EVs, electric vehicles, are also not in the purview of the deal. So we earlier spoke to market analyst Abhishek Basu Malik about the implications of this deal on the auto sector. Let's listen into what he had to say.
Auto segment, if this actually goes through, is probably going to see us, pretty serious disruption. The reason being that, for example, today, let's say, the entry level cars for some of these luxury brands is somewhere between 50 to 60 lakh rupees. Now, if that comes down to say 30-35 lakhs, then that would cannibalize the more expensive Indian SUVs that are getting sold primarily. Mahindra is doing a fairly good job in the higher end segment. You have Maruti, you have Kia. Maruti may not be present in that segment all that much, but the other players who are, the Korean players, so that segment is going to get impacted definitely, because a lot of people will then, they are likely to shift from the top end SUVs to the maybe the beginning models of these luxury cars.
Sharmila, maybe take your view as well. Viewers, don't lose the sight of the Nifty. As these positive developments are taking place, the Nifty has pulled to a day's high level at 25,206. So we'll keep an eye out on the markets as well. So some buoyancy returning to the street. But Sharmila, we were talking about the auto space. What's your own sense? I think among the major sectors, it's the auto sector that is feeling the pinch today. Is it only because they may feel losing some part of the market share to these global luxury giants once the prices get slashed from 110% to 40% and eventually to 10% then?
Yeah. No, I have actually a more tempered view, because
Okay.
yes, definitely I think it is people are going to buy a Mercedes or a BMW because it will become more affordable. Already we see so many BMWs and Mercedes Benz on the car than we did before. We shouldn't forget the length and breadth of the country, and there are many reasons that govern. When a person decides to buy a car, there are many other reasons other than just buying a sort of a aspirational car like a Mercedes or a BMW, because there are other practical elements also that you need to consider. Whether it is whether you'll have a service person, whether spare parts will be available, at what price point, etc. And I don't think, very honestly, that the government will allow the local players to suffer to the extent that there will be some rationalization that will happen along the way. So it's not going to be straightforward that everybody who bought a car and say an XUV 700, which would be in the 25-30 lakh bracket, will straight away buy the entry level Mercedes, because that doesn't fit his requirement. So I don't think it's going to be a straight line graph like that. But yes, definitely I think this is something that needed to happen, because I think also somewhere, when you see competition sort of coming into play like that, where you have a world-class product with very superior engineering enter the market, you also have to pull up your socks and, make your product better. Having said that, I do think that the quality of Indian cars has improved dramatically over the last 10 or 15 years. We've all been witness to that. So I think it's going to be a very exciting period, and I don't think that we should look at it as that all the Indian players are going to lose out to European car makers.
Fair point. In fact, let's also try and discuss what's actually left out of the purview is, again, agri and dairy as well, because these have been called out as the sensitive sectors. How do you see these sectors really performing, and how should one's approach be towards these sectors if an investor has, heavy exposure to agri, dairy-related stocks in their portfolios? What should they do? Any changes? What exactly should be the strategy?
Yeah, I don't think you really need to make any changes, because I don't really think that it was realistic to expect that the European countries were going to open their borders to allow dairy and agricultural products to get in, because they are very stringent about what kind of produce they allow to be exported, and there are very strict guidelines for that. So I think the people who are already exporting, especially like in the fruits and rice, etc. segment, they will continue to do so. So I don't think that from an investment perspective, you really need to change your strategy, because of this.
Fair point. Apart from this is, of course, one of the 9th deal, in fact, in the last 4 years we have some other deals also that are taking place at this point in time. In the, large scheme of things, overall economy, how are you seeing this new way of establishing FTAs? What kind of an impact do you see on the overall economy, and therefore, how are the markets in the long term going to be viewing this?
Yeah, so I think we're definitely going through, some kind of a transitionary sort of a phase because of the sort of tariff that were imposed on us by the US. And I think that, in a sense, all countries, I mean, not just India, we are now all actively looking at other people to partner with for other products. So I think in a way, what has happened is good, because it sort of shook us out of a complacency sort of a mode where you were just comfortable exporting to one nation and it was just easy and things were, you were just sort of going with the flow. And now you're getting into the nitty-gritties of sort of managing these deals. So there will be a period of pain for sure. I mean, we've already seen this past year as a year, I would say this past almost entire year as a year of pain, and maybe I think some more time. Because, as we were discussing earlier, even this deal, for it to finally sort of come into effect, it is going to take some time. And we are, I think, going to be actively sort of exploring deals with other countries for various other industries and products. So I think we need to give ourselves a couple of years for all that to play out. But I think what I would really like is that, not to go back to that complacency mode. Like, for instance, let's assume that this evening US and India sign off. We shouldn't, right, as a country, go back to that mode where, yes, we are back to, back to where we were sort of, 6 or 8 months back, and take it from there. Because I think this has been that way an important lesson for us as a nation, that you cannot be too dependent on one partner for trade.
Right. Viewers, let's move on from the trade deal and also cater to what's happening and the upcoming big trigger for the markets, and that's by way of the Union Budget of 2026. Just days before the budget is presented in the Parliament on the 1st of February this time, it's former RBI Governor D Subbarao who has some advice for the Finance Minister. In an open letter, he has now praised India's economic stability and strong macro numbers, but has also cautioned that confusing and frequently changing tax rules are hurting investor confidence. He says foreign investors value clarity as well as predictability and has urged the government to simplify capital gains and withholding tax norms as well. Now, Subbarao has also called for clear long-term roadmap for Viksit Bharat. And for more on this, we're also joined by Surbhi from Business Today. Surbhi, first up, give us an overview of what the letter has recommended in terms of what should be coming up in the budget of 2026, what should be addressed in terms of taxation. We've seen as a year 2025, a lot of tax reforms were already undertaken by the government. But what more needs to be done? Why is it specifically important for stock market investors at this point in time? Does it also have to do with the absconding foreign investors who've actually left us high and dry for a long time now?
So former RBI Governor D Subbarao, he said what we've also been hearing a lot from the market and tax experts, that there could be something for FIIs and FPIs in the upcoming budget. There's of course been a lot of pain. There's been record selling of Indian equities in 2025. The rupee has gone down, and all of this is also due to external circumstances which Finance Ministry sources say. But if you recall, in the last budget, the long-term capital gains tax rate was increased to 12.5% from 10% for non-resident investors. This had caused a lot of pain in the market, and there's buzz that this rate could be rejigged again, or there could be, an exemption given to specific funds of endowment and pension funds, which is available to certain entities, and this includes 100% tax exemption. But we need to see how far this goes. But what the former RBI governor has underlined is that, apart from the headline growth and inflation numbers, which is being called the Goldilocks moment for Indian economy, yes, there is pain beyond the headline numbers. And this is something the government is also cognizant of. The income tax and GST cut will give a boost to consumption for maybe another quarter or so. But what happens after that is yet to be seen. External situation keeps changing. So all this has been affecting sentiments. And of course, inflation could also rise again due to a base year effect. So the budget will have to look at all these issues.
Fantastic. Thank you so much, Surbhi, for getting us all of those insights. Sharmila, I'm coming back to you on this. How essential do you think is for the budget 2026 to really address these concerns, especially, when it comes to taxation on stock markets, capital gains related taxes, and the uncertainties in the policy changes? And do you think that is one key reason why foreign investors have been selling India?
Well, I wouldn't say that FIs have been selling only for that reason, but I do think that it's very important for these concerns to get addressed because, very honestly, markets not given really any kind of returns in this last year. If you look at your portfolio as a whole, many people are quite, sort of dejected or not unhappy with the way markets have been. And, there is therefore that expectation that they will get relief in some form. Now, in what form that comes remains to be seen because very honestly, I want to go into the budget without expecting anything and be pleasantly surprised by some positive move. But, honestly, I think for LTCG to be increased like that in itself was a bad step. So hopefully some thought is given to that. So there is a lot that can be done, a lot of sort of taxes can be rationalized and make it easier for people to sort of look at their investments and plan their investments. Because, honestly, we are in a structure where you are dependent on, whether it's your investments in mutual funds or whether it is or stocks or real estate or any of that to really build wealth. Because if the middle class is making money today, they are looking at options to increase their wealth so that they can, because everything has become so much more expensive, whether it's buying a house, a car, or any education, anything. So I think some amount of relief, if we do get in any of these sort of spheres, it would be welcome.
Absolutely. Last few seconds to go before the market shuts shop. So let's wrap up the trade for the day, and we'll come back to Sharmila in a bit. 25,236. That's a fine print on the Nifty, 188 points higher. It's the last 15 minutes of a move that has really pulled up the markets there. Metals definitely contributing sharply in trade today, 3% higher. Look at PSU banks. That was also up by over 1% today. The Nifty bank as a whole, private banks, financial services, all of them contributed. A large part of this move also has to do with a lot of earnings and upgrades by brokerage houses coming in on the back of earnings also came in for some private sector banks today. IT sector again, was celebrating today. Oil and gas and even the broader markets participated. Only FMCG, autos and media, these were the only sectors that in fact dragged, but rest of them were up and about as well. On the top moving front, as far as the Nifty stocks are concerned, you had Adani Enterprises up by over 5% at 1959. We also had Axis Bank up by 4.5%, JSW Steel. Also had names like Adani Ports, Grasim, Tata Consultancy Services, all of these names that pulled up in trade. But on the laggards front, the stocks that did not participate despite this improving sentiment towards the second half, M&M, again from the auto basket, Asian Paints post earnings, Kotak Mahindra Bank, Eternal, Asian Paints, you saw Bajaj Finserv, Max Healthcare, all of these names, about 10, 12 odd or so, including even Reliance Industries that did not participate in the positive end in today's trading session. But let's quickly also look at why Adani Group shares were up and about. The Adani Group has now revealed its plans to manufacture commercial aircraft in India in this massive Make in India deal announced today. Adani Defence and Aerospace has tied up with Brazil's Embraer Group to assemble commercial aircrafts in India, in the process becoming the first private enterprise and the only other company other than Hindustan Aeronautics to make passenger aircraft in the country. The deal also includes developing a complete manufacturing ecosystem in India, one that includes parts, services and even pilots training. However, the location and the final partnership structure are still being worked out at this point in time.
We will produce aircraft designed for shorter routes, making flying accessible, affordable and reliable for millions of new passengers. These aircraft will ensure that no part of India is too distant to be reached and no dream too far to be pursued. The Adani Group brings India's entrepreneurial spirit, industrial scale and commitment to innovation. And Embraer brings decades of experience in regional aviation, proven technology and a global reputation for excellence. Together, I'm sure we will create a synergy that not only serves India, but positions our countries as a hub for regional aircraft production and export to the world. This initiative will generate thousands of jobs, nurture skills, and create a resilient ecosystem of suppliers and innovators.
Embraer is very proud to stand here today. We're very, very pleased to go and sign our MOU with Adani. We see a big future ahead of us here in India, and we believe the stars are aligning to connect the initiative for the Make in India. We believe there's a huge opportunity here with regional aircraft, and I would like to have my few minutes that I have with you here to share a little bit of background of Embraer and why we see this as such an important market for us together. Embraer is the most diversified aircraft company around the world. We have 5 robust business units that we can see here on the slide. We had in 2025 a 7.5 billion revenue. 3 billion out of that is driven by commercial aviation, with around 80 aircraft today.
All right, Sharmila, any thoughts on the Adani Group post this mega announcement of aircraft manufacturing? Does it open up newer opportunities for investors?
Yes, you know, and in any case, the stock has corrected because of other concerns. So I think that's the only thing that you need to keep sort of a track of that news flow. But yes, now I think the stock, especially the Adani Enterprise stock, is now at valuations that really look worth investing at.
Right. We also have one viewer question for you, Sharmila. This is Preetam Das from Kolkata, and who wants to know, is there still opportunity for silver in the silver rally? What should I be really doing?
It's a very tough question to answer, you know, very honestly. And all I can say is that while I'm not saying that you shouldn't be investing at this level, but definitely I think the approach should be now piecemeal. And if you have like 100 rupees, maybe put 10 rupees at this
Right.
point and wait for drawbacks to further invest and go for silver ETFs rather than actual
Right.
silver.
Absolutely. Thanks a lot then, Sharmila, for being with us on this special edition. We're out of time, viewers. It's a wrap on the Business Today show.